We have to take a look ahead to see what's coming for us in the markets. I am Dr. Stock, Doctor of Education, and do you know why you never see pigs hiding in trees? Because they're really good at it. We have got to take a look at the economic catalysts that are coming up our way, and then also a technical analysis at the charts. So I will be showing those in this video. Moo, I'll tell you about it later. Also Patreon, I'll tell you about it later, where you can see my buys and sells. Tesla stock price prediction that's over there for their earnings that are coming up also through 2030, and then also how you can amplify your portfolio through the power of options. All that and more coming up soon. Right now, trading economics. Let's go ahead and take a look. Tuesday, October 10th. Business Optimism Index. This one for us came in just a little bit lower, and we want to keep an eye on that to make sure that it doesn't drop down too low on us like we saw back during the Great Recession. Right now, low, not great. And should that tick up for us, that is actually a really good thing that can be a catalyst for the market. So we want to watch that number to see if it's going to go up or down for us significantly in the near term. So keep an eye on that one. Redbook, same store inflation, 4% year over year. Anything under 5% there is still pretty good. That can be a pretty volatile measure for us, but between 0 and 5%, we're in really good shape. Moving on from there, Fed speech. That has very much been in our favor recently. So we want to keep an eye on that. Make sure that right now they're talking about bond yields and the fact that the bond yields themselves are up high enough that it's going to cause some tightening. They don't want to push that up any higher than what they have right now, especially where lending is concerned with the banks, and also cause any sort of flight risk from the banks when people withdraw their deposits all at once, and that causes a big old mess. So I think the Fed is like, hey, we should probably back off just a little bit on this. That has been something that treated the market really well. Take a look at the CME FedWatch tool. If we go back to November, we'll jump ahead to January in a moment. You can see we're up over 80%, almost just over 85% for this one, under 14% for the rate hike for November. So that has changed significantly as of yesterday. And that was part of the thing. Besides the momentum shift in the market that we saw on Friday, carried on very well on Monday based on what the Fed had said for us. And you can see last week coming in at 71% for no rate hike, almost 30% for a rate hike. And then if we go out to January, which I had up here just as I switched over on my screen, going out to January, we're actually close to 5% chance of a rate cut coming in. And I think the economic reports that as they come out between now and then are going to tell us a really nice story that the Fed doesn't have to be as hawkish as they are. And I believe, it's my own personal belief, that we won't see any further rate hikes from here. I just don't think that we're in that environment that it's going to warrant it. And I also don't think that we're going to hold off at this current level that we're at right now. I don't think that we stay here through 2024. I think that we see those cuts coming in probably quick once they do start happening. And I think that the market is going to like that as long as something didn't break to make it happen. So with that soft landing scenario, maybe we get it. Maybe it's a little bit messy. Hopefully not messy. Nobody really wants that to happen. If it does, we'll take advantage of it in the markets. We'll be ready for it. So let's move on from there. We'll go back to trading economics, because tomorrow in the markets, we get PPI coming out, and we don't want to see these numbers right here, 0.3 and 0.4. This is a consensus. This is trading economics forecast for what we see for PPI for total final demand coming out month over month. And we were at 0.7 last month. So we'll see if energy prices are something that continue to push that a little bit higher. We'll watch for that. Core is the bigger number here, watching for that as well. We don't want any of these numbers to come in higher than what's expected. If we want to continue in a bullish direction, that would be upward pressure on the markets to come in even or lower. It'd be downward pressure to come in higher than those numbers. So keep an eye on those. At 2 p.m., we have the FOMC minutes coming out. So I think that's also something that can be a negative catalyst for us up until they come out. And then once they come out, I think the markets, should they experience any downward movement, could recover from there following that 2 o'clock hour. So maybe just 10 or 15 minutes, a nice little V out of the markets, and then we recover based on that one. So then what's the next big thing after that? Well, that moves us into Thursday, and we actually have two big things. One is CPI coming out. Consensus and forecast on this, 0.3%. When we look at that on a core basis, coming in under 4% is going to be huge on a year-over-year basis, and that's going to be tough to do. But if we come in soft on consensus and forecast, that can be something that helps us out a lot. So we'll see, again, if energy bleeds its way into these core prices, it is possible that we come in a little bit higher than those. And 0.4% plus is going to be downward pressure on the markets. 0.3% down is, in my opinion, going to be upward pressure on the markets, that we either get to breathe easily because we came in with what was expected, or we come in lower than what's expected, and that allows us to, at least have a little bit more excitement. Like I said, we'll look at the technicals in a moment here. Initial jobless claims is the other really big thing that we have coming up. We still haven't seen any softness coming in through here, and I think that still has people hanging on with the Fed, with the hawkishness that they have going on, that showing a little bit of cracks going on here, that we start to come in at the mid 200,000, so halfway between 200 and 300,000, I think would be very positive for the markets, upward pressure, not necessarily for the people losing their jobs, but for the markets themselves. I think seeing a little bit of softening there would be something that would very much help out our situation in the markets for seeing further gains from where we're at right now. So we do want to watch those as they come out. Friday, we have Michigan consumer sentiment at 10 a.m. So we want to be watching for that as well. Now, Thursday itself is kind of interesting because we can have something excellent come out for CPI, and that's upward pressure. However, Friday we have big bank earnings, and we want to be watching for that. Thursday is the last day that we get to trade before those earnings come out, and so that hearing from those banks, I think, is going to be something that's going to be on a lot of people's minds. I think it's going to cause a lot of worry and uncertainty in the markets on Thursday, so I think that's going to be downward pressure in the markets on Thursday. I don't know that we have a really strong finish to that one. So even if we do get exciting news about inflation, about jobs, I still think that we have downward pressure of those bank earnings coming out. We'll listen to what they have to say, and that's really going to set the tone for what we see in the markets going from here. And then the next thing after that is big tech earnings that we also want to be on the lookout for. So from there, let's move over to the charts. So what we're looking at here is SPY, and what I have up, I have these trend lines up here for you, and you can see off the top of these things that puts us up above the 50-day, which is this line right here that's in blue. And we didn't quite make it there. We got close on the SPY, but then the markets retreated a little bit on us, and that's to be expected after this nice little run that we've had on good volume. I will say, when you look at the momentum indicator down here, we have crossed over 50. That is a good sign for us in terms of momentum. I think we're holding back for those inflation reports to see what exactly is said there, that we see inflation continue on its downward trajectory, as I expect that we will. Energy is one of those things that can really horse us up, so we want to be on the lookout for that one. And if we look intraday on this one, go down to the minute chart, for example, and there we go. We'll bring all that in so we can see that happen, and we'll also expand this a little. Actually, we'll do this the easy way. There we go. We can see what the market was like. There we go. And look at that drop off that we got right at about the 1 o'clock hour coming in for us. So you can see that drop come in, and you can see that we settled down a little bit lower in that. So that is very noteworthy to pay attention to. And I think that tomorrow inflation can be one of those things. The inflation data from the PPI can be one of those things that determines which way we go from there. When we take a look at the weekly view of the SPY, by the way, we didn't make it down to the 50-week mark on this. We got sort of kind of close, but not quite there. Going back to the daily on this just for one more moment, just to see what it looks like. There we go. Where do we get stopped out? Where do we turn things around? We turn things around right at about 437. So that's noteworthy. And then we closed today at about 434. And I said before that this was going to be a game of retesting resistance, and we almost got to that 438 level. Should we get to 438, we got room up to 442. We're going to have to watch for that. So for the Qs, we actually broke the 50-day on the Qs. That was incredible to watch that happen. And then this line that I have right up here for resistance coming in at about 371.50. I said 372 is that ultimate rejection level. So far, we got rejected off of that. However, we stayed up above the 50-day. So momentum on this looking even more bullish than what we had on the SPY. Big tech certainly being one of those things that led that, but then also big tech being one of those things that, having run up so much, didn't have a lot of room overhead. So we want to be watchful of this, that if we're going to continue in our upward path, not only do we need to break this trend line that's coming down this way, but we also need to break these previous peaks. We had good volume coming for us on Friday, Monday pretty good, Tuesday pretty good, but now we're hitting more of those regular volumes, more so than that igniting volume that we had off the bottom of this thing. So we do want to keep an eye on this, see what's going to go on. Inflation could be one of those things that is either going to move us up even higher from this, maybe retest this trend line that we have, and maybe we see 374 come out of this. Maybe, possibly. We're going to have to keep an eye on it. The number that we're trying to beat is about 378. So if we come back and hit 378 on good momentum and break up above that, put in a new higher high, that could be very good for markets. So we want to keep our eyes peeled for that as it comes along. I'm going to take a quick break to tell you about your 16 free stocks from Moomoo. This offer does expire coming up on October the 20th. Here are your deposit levels. Here's the free stocks that go along with it. And here's a free share of Tesla or Google at that $5,000 deposit level. If you want to see my buys and sells to see how I'm playing this market and how I'm profiting from it, then come on over to the Patreon and check out the Discord that's over there, because that's where I post my buys and sells and where my community is. And they are incredible. Absolutely love having them over there. And I'm very lucky and fortunate to have them. And it's a very open learning community that we have over there. It's a great atmosphere. And I have my Tesla earnings and stock price prediction video over there as well. It's available right now over at the Patreon, Q3, Q4, and every year up through 2030. You can go ahead and check out what I think is going to happen with Tesla from now up through that future, what trajectory I see for it. And then if you want to learn how to amplify your portfolio's opportunities, you can do that through the Power of Options with the course that I'm building out over there right now. So let me put that down for a moment and we'll start to wrap things up here with some final commentary. So inflation, watch those reports. FOMC minutes going to be big for us. Jobless claims also going to be big. Michigan consumer sentiment at 10 a.m. on Friday. All of those are big catalysts for us. Those big bank earnings really have what I think the market is going to be worried about those on Thursday. I think we're going to see that reflected in our trading day. So we'll see. Tomorrow could be a very green day for us. Thursday could probably start off green. Maybe we end up closing lower. Something like that. We're going to have to wait and see. And then really whatever the banks come out and say about credit tightness, about economic outlook, if they use a lot of talk about recession, if they talk about any sort of deposit flight risk or anything like that, we want to be all ears for what they have to say in those earnings calls. And you're going to see it in the markets as each of those companies report. And by the way, the Moomoo app on mobile has a wonderful earnings calendar on there. Pretty much you go in and there's a nice little calendar, has everything displayed on there. And I'll put that in one of my future videos as we get into earnings season here. I think it's going to be really important. So again, if you guys want to see how I'm playing this market, come on over to the Patreon. That link is down in the description. Join us in the Discord throughout the trading day. And also your free stocks from Moomoo. Don't forget about them. Thank you guys for watching this video. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.